All right, we are now live for another week for our Get Funded office hours. Every week, we have promising early stage founders that come here and talk about their companies and their stories. So we're super excited to do this for another week. For those that do not know me, my name is Daryl Frater. I am senior associate at Sirac Ventures. We're a seed stage venture capital firm in Oklahoma, investing across the country. We primarily invest at the seed stage, do some pre-seed as well, writing checks anywhere between 250K and 750K. We're actively deploying. So if you're a founder, we'd love to talk to you. Today, we have an amazing founder that I met a few months ago, Preston Troutt, who is the founder and CEO at Crowdsurf. I would love for Preston to jump in, tell us a little bit about Crowdsurf and what you do, and then we'll dive into other questions. You have the floor, man.
Yeah, man, I appreciate you having me on. I really appreciate it. But yeah, so I started Crowdsurf. So we work with creators, and we have this interesting funding model where we give creators the ability to raise money like a company in exchange for future revenue and IP. So our view is that, these individual creators, are really companies themselves, but they don't have access to capital the same way that companies do. And it's very much a venture-like approach, where you're investing in everything that individual does for a duration of term or time, generally kind of 10 up to 30 years. So we're excited. We have our first creator live right now. We did kind of a closed beta offering behind closed doors. And, the first creator they're offering ends in the next kind of 4 days.
That's awesome. That's super exciting, man. And tell us about the origin of this idea. The first time I actually heard of this concept was on a podcast. I think it was the 20 VC podcast where I saw another company way back doing something similar. But tell us a little bit about like the origin of like how this kind of concept started and why are you so passionate about like being able to allow people to invest directly into a creator's career?
Yeah, definitely. So this regulation type, came about in the Jobs Act of 2016. And so it's only been really around, 8 years or so. And basically, through that, it was designed to allow unaccredited investors to invest in startups. And so before this, I was at $1.5 billion family office, investment fund. And while I was there, we did the angel round in a company called Commonwealth, which does this exact structure, except for racehorses and then golfers and tennis players. And so while I was there at that investment fund, I was still working there, but I basically went full time with Commonwealth and got very familiar with the SEC regulation side, the technical side. You have to build your own tech out, integrated with escrow, all regulatory tech, and then just these kind of alternative, investment potentials. And so with that company, we actually had a horse that returned like 12x on an investment, and then we broke up the ownership to a horse before the horse had ever raced. Fast forward 8 months later, the horse wins the Kentucky Derby. And so just a really interesting time to see, that horse had 392 owners who were invested in him, invested before he ever raced, and then he wins the Derby. That's the pinnacle of the sport, and you have 392 people. We were at the Derby. We rushed the winner's circle, had hundreds of us in there, as it felt like. But during that time, and while I was at the investment fund, I had done a lot of work on the gaming space and really kind of the entertainment space, and looked at the esports orgs, FaZe Clan, Optic, 100 Thieves, looked at the developers of the games, the publishers of the games, and then really the picks and shovels, and saw that there was this really interesting kind of group that really sat on top of all of that in these video game streamers, and really these content creators as a whole, where every single piece of the entertainment industry was really starting to go to them to pay them to play the game, to pay them to promote the game, to give them equity in the games, which was really just starting at that time. This was kind of 2020 time period. And the thought was like, okay, and then I kind of really looked at the funding infrastructure for this creator world, and there was companies like Spotter that were basically giving these individuals money in exchange for their back catalog. Investors knew how to invest in startups that these individuals were creating, which was very early. You hadn't had Logan Paul and Mr. Beast do what they did. And then you had like advances, which is kind of what the music industry has done, an industry that's, 75, 80 years old. But you really didn't have a venture-like model for these individuals, basically saying, hey, you have four things going on. None of them are really an investable idea or venture backable idea. But if you tied them all together and that individual basically attributed everything they were going to do for a set period of time, double-digit years, then all of a sudden you have an investable idea where you say, okay, I wouldn't invest in one of those individually, but I would invest in you. And so we really replicated this, or not replicated, created this model, giving, individual retail investors the ability to invest in that creator or individual. And then there's an annual distribution of that individual's top line. So it's equity investment, but there's distributions tied to it. And so the real kind of, to tie all that together, we saw that there's large power in having this community of investors, and then really saw that these individual creators were starting to rival corporations like Logan Paul with Gatorade and Prime, Mr. Beast with Feastables. And you have a number of these individuals where truly, public trust is moving away from companies and to the individual. An individual, and they've been marketing those companies. What happens next is they're just going to start competitors. And so venture-like model for these individuals earlier in their career.
That's awesome, man. I think by creating this new almost asset class of its own, you're allowing unique people to be able to get into this asset class as investors, but also the creators that need that extra resource to get their creator business off the ground. They have a pathway to acquiring this capital in a way that they probably couldn't do it before. Would love to hear, like, when you think about your target market, both on the investor side and the creator side, who is this for on both sides?
Yeah, definitely. So on the investor side, I think there's really kind of two groups. You have the individuals who are just interested and understand investing as is, but may not really know the creator. Individuals that could put maybe larger checks. Also individuals that are looking for like, investment opportunities that are really uncorrelated to the broader market. And then you have the other side, which is the creators community. You have these individuals that have large communities, of people that follow their every move, yet they're still kind of living month to month. The revenue hasn't caught up per se, and they have a lot of potential opportunities, but no real access to capital to step on the gas. And so, creator that we work with, for instance, to go into kind of a creators that we target, he's an individual who has a number of different channels. Kind of his biggest is on a short form YouTube channel, but he's got a number of long form YouTube channels. And, he's really in order to keep the lights on, he's got to continue kind of cranking out the short form, and taking brand deals there. But he's going to he's raising money, and the entire idea is he's going to hire a couple part-time editors to crank the long form, take his eyes a little bit off the short form channel, and really go hard at the long form because of the monetization that can happen. On his short form, he's got, a ceiling, but on his long form, he doesn't at all. And so we generally like creators that have a core platform, generally YouTube or video games, or streaming, that have not only the creator mindset, the ability to like, kind of get the following, and get views, but also a business mind of, hey, well, what do I do with this? Okay, I'm analyzing, my revenue I can make per 1,000 views. I understand that. I understand, that if I start to scale, what else do I kind of set up alongside that? And then I think the third thing is like, what is their niche? Like do they have something they're known for, or are they just kind of famous for being famous? People can grasp like quick taglines like, oh, that's the Fortnite guy, or oh, that's the skit comedy guy. He does this like Discord mod comedy skit videos. And so I think really on the creator side, it's like true platform showing how you can scale, creator and business mindset, and then some sort of niche that they can own and scale.
That makes a lot of sense, especially for those creators that already have an established audience, kind of know where they're at, and they are at the point to where you kind of know they're in it for the long haul, not going to just raise some capital and kind of dip off with it, but really be able to use that to invest into their own creator business and scaling with that capital. So I think that's perfect, like a sweet spot for them to be in when they come to a platform like yours. How much capital are they able to raise on their platform? And then we can also talk about kind of where you're at with the platform. How many, do you have people already on the platform? Is it live? Let's get some insight on that. So first on, how much can people raise, and talk to us about some success stories on your platform so far.
Yeah, definitely. So we got what's called a Regcia funding portal license. So we're registered with the SEC. And with that license, it allows us to raise up to $5 million from unaccredited per creator for as many as we want a year. And so each creator can launch an offering that's up to $5 million and take money in $50 to $100 increments from unaccredited investors. And if they were to raise more, which I don't plan on doing anytime soon, but I would love to, is you can set up, a Reg D alongside of it for accredited investors, which you can, go as high as needed. And so that's kind of the limitations, there. Currently, we have an offering live that's 120K raise. We're about halfway committed there. And then there's a couple other individuals that are looking at filling out the rest. A number of kind of pretty massive YouTubers that are looking at filling out the rest. And then so we're excited for that. That's currently there's certain limitations around what I can and can't say around, offerings that are live, given we're the funding portal. But currently have the one live. And then I have a couple others kind of, just about there afterwards.
That's exciting, man, and congratulations. Just being able to be a pioneer of this new model of investing directly into creators through this similar like crowdfunding portal. And I think that this is something that, especially if you have these wins of like, hey, this person raised capital from this way and then became the next Logan Paul or Mr. Beats. It becomes this thing where people see this as, hey, maybe I can do this as well. So I'm definitely hoping for those early wins to really propel this as a staple within the ecosystem of how people can get the initial capital they need for their creator career. So congratulations on just pioneering the way.
Yeah,
I'd love to
definitely.
talk about, anticipated or kind of what is the return profile that is ideal or targeted or estimated when people are investing in these types of new asset classes. What is like the promise or the expectation when it comes to investing in this way?
Yeah, so I think to best explain that, I can kind of talk through the structure of how it's set up. And so every creator will have an LLC that they run everything through. That's their operating entity. And so what the way the structure is set up is there's an additional LLC taxed as a C corp that's set up alongside that where the money is raised. And that's so that investors get a 1099 and the creator keeps their pass-through benefits. And that entity is kind of entitled to, the percentage from the creator's revenue rights. And so, the cool thing is that with that, if a creator goes, let's say it makes 100K in a year, 10K to 10% is distributed down, small tax withholding, and then out to investors annually, which we can get to monthly. And so it's a cash flowing product, investment product with equity like, venture like potential. And so that's the interesting thing with creators. Our first a creator that we work with has, 8 different revenue streams. And some of his channels have the potential to be sold altogether, and some of them don't. But you're not necessarily playing for that. You're playing for, okay, I'm investing in this individual and I'm aligning with everything that he does for the next 10 years. Now that's platform revenue, brand deals, merch revenue, companies created, equity that he gets in companies, and then whatever is created, any IP or companies created during that 10-year time period, investors retain their rights to even after that's over. And so if that during those, that 10-year time period, that individual goes and starts let's take the Logan Paul scenario. He starts Prime during that time period. Investors retain their rights to 10% of Logan Paul's piece in that. And so that's how you have the chance to go do, 1,000x, albeit the probabilities are low, the same way that venture is. But then you have kind of the side of just the annual distributions from the other channels that are being distributed out. And so, there's the chance, to really, when you're aligning with an individual to go do, kind of a massive return. But you have the annual distribution flow out. And so I think that's the interesting thing. There's another company that does what we're doing, except with just the YouTube channel. Um, and that's interesting, but you don't really have that high rip potential. Now our valuations will be a little bit higher than theirs. And so, you're going to have, a variance in outcomes on our side. But yeah, so that's kind of I wanted to talk from the structure on how it's set up because you have the annual distributions, but you also have the equity like potential if that individual really starts to scale.
Yeah, that's super interesting and similar to our work as investors. It's high risk, high reward. So, being able to put a few $1,000s in, and who knows, this creator might really become something special. But getting the opportunity to be able to invest that early really opens the door to a new way to, invest and make a great return. So thanks for, making this even a possibility for everyday individuals that want to get this kind of exposure, especially like you said in the beginning, like you could be a huge fan of this creator, but now you get to just have the enjoyment of participating in the upside of their success, which is probably an incredible fan experience as well.
Yep. Yeah, 100%. Yeah, I think that's the other side of this that will be the fun part, of like you're really investing in what that everything that individual does over that term length. And so you'll be following along. You'll have a, investor dashboard where you'll be able to log in and see that creator's revenues broken out by category, as well as kind of the distributions that come from that, and eventually the analytics across all social channels. And so you'll really be able to follow along and like, almost feel like you're a creator, along for the ride, seeing the different breakouts of revenue and analytics happening. And so you have that emotional side where there's entertainment ingrained in what's going on, because of the access to information of what's really happening with your investment and with the creator.
That's awesome, man. Great insight. And thank you for sharing that detail. I don't want to dive too much in the weeds, but I do have one question that came to my mind in regards to like creators and other things that they do outside of what they consider in their creator business. How do you like maintain the value to be held within this entity and for them to like not go off and do new things that aren't benefiting those early investors? Can you tell me a little like off-platform things or things that how do they retain doing that great work that benefits the investors?
Yeah, definitely. So the other part to the contract is basically the individual uh signing an agreement, between themselves as an individual and their entity that says everything around my creator career, and there's a number of kind of definitions in that, really name, image, likeness, public persona. And then you really list out what's included and not included, will go through this entity. And so and then the understanding is, I'm raising money based on this, that I will put everything that I do through this entity, and so you don't miss the Logan Paul scenario. And then you have exclusions. So like any publicly traded stocks that they buy if they're public at the time is excluded. Any real estate is excluded. But then everything around their creator career is put through there. And then the second part, well, actually, that's not part of the question, but to really protect the individual, um, there's a minimum revenue threshold that's set, and basically saying, hey, until you make this amount each year, you don't give up that percentage. And so it's to really, the idea is, okay, we think you're a talented individual. Um, you don't have access to capital. So let's get you, you know, sometime multiples of your last year revenue, um, and align with everything you do. And if it doesn't work according to plan, there is a kind of a minimum revenue threshold that you have, because we're really trying to play the winners, and what we're really trying to do is give that individual the ability to think medium to long rather than short term. Rather thinking in this place of, well, let me take this brand to keep the lights on, let me perform to keep the lights on. Um, did I lag out?
You're good now.
Okay. Interesting. Yeah, I just lagged out for a sec. Okay. Yeah, it looks like it's all back.
Awesome. We have a lot of founders that listen to this as well as investors. And I'm looking at your LinkedIn, that had a question that sparked into my mind. Your LinkedIn says, in the future, every individual will be able to access investment capital based on their future financial output. And you believe that creators will be the biggest beneficiaries of this model. I want to ask you, what do you think is the importance of having a unique perspective of what you believe the future will be like? And how does that shape and mold you as a founder? And should other founders have this kind of unique perspective of what they believe in the future before deciding to start a business? We'd love to hear your insight on that and how your unique perspective drives you and Crowdsurf.
Man, yeah, that's an interesting question. Yeah, it's the that mindset or that thought really started from a place of rather than looking at individuals accessing capital based on their future financial output. It really started in a place of like almost like um bottoms up. Like I'm like, hey, creators need capital, and there's no real access for them that makes sense for them. Most of them don't have a company idea. Most of them, like, only the big ones really have a catalog that you can advance money based on. So it really started with like there's this interesting class of companies that are starting to come up that don't have access to capital, and no other model makes sense, but these individuals at the high end are starting to rival companies. And so it's like, let's apply this and give them a venture model and let them raise money from their fans to really step on the gas. And then you align everyone with everything you do. Um, when we started that, I was like, I think this will really work. I mean, and then I think what's interesting is I've seen a number of other players that have popped up, um, Slow Ventures, the Lieberman brothers, that have really, I think, continue to help me flesh out what this space could be. And the Lieberman brothers have this really interesting stat that talks about collective national ownership of wealth through generation. And granted, there's going to be some redistribution of wealth and some changes in this, but granted, it's a trend. And the idea is, okay, boomers, when they were, in average age 30-ish, they own 28% of national wealth. Gen X 8%, millennials 2.8%, Gen Z is on track to be negative 2.8%, meaning you'll own nothing. And the government most likely isn't going to fix that. But historically, capital markets have been able to. And so the thought is, okay, is there a way for young, talented individuals to access capital based on their future financial output? Understanding that there's wide varying degrees of outcomes, and your youth is your biggest asset. When you're 18, when you're 20, you have such a wide dispersion of outcomes rather than when you're maybe 40 or 50. And so that is a thought that's formulated over time, but makes so much sense. I think I've gradually gone into that. Because, another side is like, there are a lot of incredibly talented individuals that don't have a venture idea. Hundreds of thousands. It's like, if you think about that thought, you know what? Like, everyone's had that thought where it's like there's a young dude and it's like, I don't know exactly what he's going to do, but I would bet on him. And so that's the thought I think with this, is like a lot of those individuals don't get that chance. And I think for me, I had internal backing from my family at the start, probably potentially before I was really ready. But it gets, and I'm so incredibly thankful for that. And, there's the side of like, with that, it's like, okay, well, these individuals, like, no one's really ready for it, but if you said, you know what, I want to get you in the game, flood you with cash, understanding that you're going to make a lot of mistakes, but we're going to get you in the game that much quicker. And so I think, like, going back to it, I think those thoughts are formulated over time. You see some of these founders where it's like, man, I was so naive when I started, but I'm so thankful for that I did, because that the thoughts come together as you go, and you need to have a clear thesis. But you see them and it's like, just start messing around, and really like have a core thesis, but understanding that you're going to make mistakes. I'm continuing to make thousands. So I'm saying all this from like
Yeah.
another lens, not like I know anything. But it's like, you see these founders talk about, like, man, if I would have known all that, or, it's like, you can put together 9 out of 10 and then you got to go figure it out. I think that's where I'm at right now. But it's like this cool thing of like, just get going, and just put things into motion. Once again, I'm figuring out all that. So I'm not talking from a place of I know anything. I want everyone to be clear on that.
Yeah, no, that's incredible, man. And I think just having that unique outlook of what you believe the future will be like really puts you in a position to have confidence and conviction to go the path even when no one else sees it. So kudos to you on what you're doing. Similar to you, I have a belief that wealth will be distributed, democratized, and people will have more access to wealth building opportunities. So I love what you're doing with Crowdsurf, both on the creator level and the individual investor level. Both sides of the market have a potential to use it as a wealth building opportunity. So that's why I think what you're building is super exciting, unique, and much needed in the ecosystem. But thank you so much for joining us today for our Get Funded Office Hours series founder interview. It was really great hearing your story and a little bit more about Crowdsurf. Can you please tell everyone what's the best way to stay in touch with you and the work that you're doing with Crowdsurf?
Yeah, definitely. I think number one, I think you can check out our site at crowdsurf.xyz. We've actually got a whole kind of brand refresh that I'm pretty excited about coming a couple weeks from now. Um, and then number two, I think like LinkedIn is easy. I've tried to be fairly active there. That's actually how you and I connected. which is pretty cool. So I think those two right there. I think check out our site. We have a intercom little chat thing that just texts me whenever someone hits it, and then LinkedIn as well.
Awesome. Well, thank you, Preston. It was a pleasure and looking forward to staying in touch and following your journey. For everyone here that's on the call, please join us as we transition to our Get Funded office hours. Every week, we have great investors from our network that join us for you to pitch them. Today, we have Youssef from Ali Corp and my friend Bruce from Everybody Ventures. So if you please want to join us on Twitter Spaces for that session, join us over there and we'll love to have you. But thank you so much and have a great day, everyone. See y'all soon.
Thanks, everybody.